Hey everyone, I'm Charting Man Dan, trader and technical analyst with the Chart Guys. We had a huge bear day to start off September, pretty much the ideal start to the month, breaking some key short-term daily supports and retracing the bounce from a couple weeks ago even more significantly. Let's look at what we're watching from here and what would be ideal for bulls and ideal for bears in the coming week or two. So big bear day, the S&P 500 down 2%, the NASDAQ down 3%, a little bit more at the lows of the day. We did get all major sectors hitting the low of the day at the same time, QQQ, XLF, XLV, but it didn't happen until the final hour of trading, and it was just complete bear control all day. If you look at the NASDAQ, this is the futures chart, but we didn't confirm a 5-minute uptrend at any point. There was no fake out. We grinded down, rejected from EMA 12 resistance on the 5-minute all day, got above it, didn't break resistance, and then just kept rolling over. So the hourly RSI is definitely crushed. We're looking for an hourly oversold bounce and a lower high there. But what's most important for me is that our recent lows of consolidation broke. And that was my simple statement heading into the week. If these lows hold, the bulls are just fine. If these lows break, we have to take a step back and reassess, because that's the bears proving that they are keeping bigger picture control. Even with the NASDAQ, which has been leading consolidation, no red flags on this pullback here. But now that you got the confirmed daily downtrend, it's definitely a big warning shot from the bears. We also have the S&P 500 break daily support. So ideal scenario for bears, and let's go rewind. We ended August with the ideal scenario for bulls. And what that was semiconductors and the NASDAQ starting daily consolidation, and that lasted a week and a half, 2 weeks. And while that was taking place, XLF and XLV saw lots of inflow in terms of look at this XLV move. We just hit all-time highs, something like 12 out of the last 13 days in a row. That's the third most important sector in the S&P 500. The second most important sector, XLF, hit an all-time high 7 days in a row, including today for both of those names. So they rolled over into the afternoon, but that was ideal. That's rotation. What would be ideal for, let's go bulls first. So from here, what bulls really want to see is semiconductors and NASDAQ. We just want to see the opposite. We know daily consolidation is inevitable in XLF and XLV because they've been going pretty much straight up for 3-4 weeks at this point. When they're pulling back on the daily, bulls really want to see SMH and QQQ get daily bounces going. Because again, that would just be that continued rotation, which overall, bulls always want to see rotation. Bears want to see all sectors dropping together and money leaving the markets, which is what we saw today. So what bears want to see is XLF and XLV start daily consolidation, and SMH and QQQ keep pulling back on the daily and fail to get any kind of bounce going. So that's what we're going to be watching for this week. We have jobs numbers Thursday and Friday, which are going to be some short-term data, the FOMC next week. And again, you look at the S&P 500, and this is where it's very important to distinguish what you're talking about. If I say the market's bearish, that's so vague. XLF and XLV are extremely strong. They're the strongest they've ever been in the history of those sectors. The NASDAQ is very weak in the short term. Semiconductors, even weaker. So you look at the S&P 500 on the weekly chart, there are no red flags on this weekly chart at this point. There was the possibility that this was a little daily bull flag right under the all-time high, and that's now a lot less likely. But again, you look at this weekly chart, and there are no red flags at this point. So that's this S&P 500 chart will stay strong if this rotation keeps going. If it doesn't, things can get ugly because it is a double top at the all-time highs. As far as watching our retracement size on the consolidation, we know if we hold weekly EMA 12, that's ideal for the bulls. That would stay a potential weekly bull flag. If you're a bear, you want to see 50% plus retracement on this drop, which we're not even close to yet. So essentially, S&P 500 still just fine, not ideal. We rejected from resistance, but bigger picture, still just fine. NASDAQ, a little bit more red flags. We know the NASDAQ generally is leading the market up. It's now got its weekly lower high set. And so the big question I have for September is, are we just going to see weekly equilibriums shape up in September? A weekly higher low is still the most likely scenario for me due to the size of this bounce retracement. But, another couple of days like today, and that can definitely go out the window. Bears got what they wanted today. So not a ton of support established on the way up. That's the other factor with that V-shaped bounce. Less than ideal because you're not stair-stepping on the way up and building. Well, we are stair-stepping, but we're not build in these little supports on the way up to back test on the way down. So what the S&P 500 futures chart bulls want to see is into tomorrow for this to be a potential megaphone. And you can see here we had resistance breaks with no follow through and some support breaks with no follow through. That's the big question. Do we get a bounce overnight here and see this continue to play out or not? So I now take a step back and reassess from being all bulls, and now the breaks of support definitely has shifted things and a lot less comfortable being a bull here in the short term. And certainly wasn't fighting today. Today I made an attempt on NVDA, stopped out break even on that long attempt. It's still dropping after hours. We'll look at that in just a moment. Lots of shares hitting the ask as I speak. A lot of shares. Looks like someone is racing for the exit here. Guess I'll show it, huh? They're just walking it down on the ask. I'm just staring at the bid in the ask right now. Just absolute carnage. Should stop just about now. Boink. How did I know? Just watching the ask. It was an order that just kept ticking down. Very large. And as soon as you get to the very end of that, once it's gone, there's going to be nothing behind it. So I just went all in right at the bottom. No, definitely not. But you get a lot of information watching the bid and the ask, as you can see. But obviously a bear win there. So we'll see if we gap down on NVDA tomorrow. But that was a lot of shares looking to get out. All right. So SMH has been leading the way down. And again, the way that I view the market, NVDA is the most important individual stock. The S&P 500 is not going to go up in a meaningful way without the NASDAQ. The NASDAQ is not going to go up in a meaningful way without the semiconductors. The semiconductors are not going to go up in a meaningful way without NVDA. That's really, I gave the analogy on Twitter that it's just these Russian dolls of one inside the other. And so SMH, weekly lower high set, heading back down. The retracement that we've given back from this bounce is already over 50%. So bears like that. At this point, the bulls are just hoping it's a weekly equilibrium, and the bears are hoping this is a longer term head and shoulders. And so bulls need to regain a daily uptrend, set a weekly higher low, and try and keep tightening up. And bears just want more of today. We have tons of space for hourly lower highs to be the result of the next bounce into tomorrow. XLV. So again, all bulls. No red flags whatsoever. The next information that I want to see on XLF and XLV, do hourly oversold conditions mark daily higher lows? If they do, that's your healthy hourly back burner showing the bulls still in complete control. And again, if the S&P 500 is going to significantly weaken, a bear wants to see XLV significantly shift and XLF. They want, this last month has been straight up. Get back over half of that, and the red flags will keep coming for the broader market. Same thing with XLF. I do have a little short in XLF today. Only 2 trades I took. I've been traveling the last week. Sleep schedule's all messed up. Got back today. So I'm not trading the open today. I'm going to keep an eye on things and take it easy. Unfortunately, it was a very volatile day, which can be some big winners, but I was taking it easy. Again, NVDA bounce attempt that I had attempted. We are free falling from the earnings reaction. And again, no support. So weekly lower high set. Bulls just hoping for a higher low. But had a good entry for a short-term bounce. I was in down here right near those lows, sold some into the bounce, and then eventually stopped out break even. So I'll certainly take it on a day when you're down 9 to 10% on the most important stock in the market to go break even on the bounce attempt. That's just fine. But tons of space for the hourly lower high, tons of space for a daily lower high, and now it's just a question of where can bulls establish a new support level after this earnings reaction. And again, definitely still in free fall at the moment. So healthcare, looking for daily consolidation, watching the response to hourly oversold, watching daily EM812. Same thing for XLF. Broke the low of Friday, so a little bit weaker. But again, certainly, if you look at XLF and XLV and nothing else in the market, everything's strong. There's nothing to worry about. But we know that semiconductors and big tech matter a lot more for the broader market as a whole. The weight that they have is a lot more significant. IWM, Daily downtrend confirmed, making the weekly lower high more convincing. Again, a lot of space for a weekly high or low, but definitely a lead bear, down 3% on that ETF today. So a lot of weakness still there as well. And that's definitely going to be a lead bear, as long as bears are liking how IWM is positioned, considering XLF has not topped out yet. And there's a lot of correlation between IWM and XLF because the financial sector is the largest sector holdings in IWM. MSOS. So over the weekend, we got a headline that Trump is supportive of the vote to legalize in Florida, which is a bit of a curveball to many, not to everybody. Oh, there's that news. NVDA subpoenaed by US DOJ, antitrust, blah, blah, blah. Bear with me. Okay. So, daily bounce underway for the ETF. Again, as I've been saying for months, I'm focused on Florida names. That is the short-term catalyst that I care about in terms of potential impact on the individual names that benefit from Florida. That's where the best risk reward is in the sector right now. And so, MSOS, daily bounce, it's weak. We're in a downtrend on all these time frames. I don't care about this chart. I mean, I keep an eye on it, but I'm not trading it. I like TCNNF, and that is my only focus, because TCNNF divided by MSOS has been showing us relative strength for months and months and months, and here we are testing the highest that we ever have in terms of relative strength. We are about to hit, potentially, it's the highest close we've ever had, strongest TCNNF has ever been to MSOS. Why would I not focus on the strongest name? In a very weak sector, granted, but again, if we get this positive vote, which is still up in the air, but probabilities shift to favor it passing with Trump backing it, regardless of whether you love him or hate him. And so, if this passes, there is some nice upside in these individual names for the benefit in terms of the increased target market. Their target market in Florida will increase hundreds of percent. Their customer base will increase hundreds of percent through tourism and through the general population. Talked about this in the cannabis videos plenty, but anyways, still in TCNNF and need to break. It's a nice hold of $8 again. That's a good sign. Base down at $8 now, but clear resistance still at 1045, and that's still 10% plus from where we stand. So still a lot of work to go. We did close at the high of the day. That's definitely a good sign on the gap up open. Generally, a gap up open, got to be cautious of a top being set, but not with this headline momentum behind it as far as today is concerned. So, need to confirm a daily uptrend. Still a while to go before the election. 2.5 months before it gets for real. So again, we need a daily uptrend and try and head back to these recent highs. But that's the only name I care about in the sector right now. The dollar, weekly bounce underway, not surprising, because if you look back historically, when the weekly RSI gets oversold, it doesn't stay there long in the last 14, 15, 17 years. We're going to look for a weekly lower high. We have not confirmed a daily uptrend yet. So the next question is, can bulls confirm a daily uptrend to keep the weekly bounce going? But we will be looking for a weekly lower high. Impact on the metals, gold, weekly consolidation is underway. Again, simple statement. If weekly EMA 12 is support, the bulls have nothing to worry about. And daily is a potential head and shoulders. No, it's not, because this left shoulder is above the head. It's a potential equilibrium if this support holds. So clinging on to daily support. Silver has been weaker than gold overall. You can see a much more clear weekly lower high being set. Only hope for the bulls here is an inverse head and shoulders, which is a very similar setup to what Bitcoin currently has. No sign of the weekly high or low right now. Got to see the weekly lower high shaping up in the dollar to have confidence that that is shaping up. And oil finally broke this equilibrium bear. Bears are liking that 2 support levels were taken out in one day. Now it's just 69.50 to take out the lowest level that we've seen in the last 6 months. This is a bear break of the equilibrium, and that is a big win for the bears. And now it's just a question of what kind of follow through do we see? And XLE, weekly lower high is now set as well. We'll see if XLE bears can take over. It's clearly stronger than oil itself at the moment. I've been watching OXY, which is a Buffett name, but it's testing its recent lows. Very clear support zone being tested, 54 to 55. But I'm not going to be playing off support personally. I don't have enough conviction. I'd rather it hold support and then make a move. But overall, in summary, big win for the Bears. Great start to the month of September. Now the question is, what happens to SMH and QQQ when XLF and XLV see daily consolidation? How long do bears keep the daily downtrend? How much weekly retracement do we see? Do we show up with the volume? Honestly, I thought there'd be more volume today. QQQ volume is above average, and it is the highest in weeks. So relative to the last few weeks, it's high. But for a 3.5% drop at a certain point today at the lows, I would expect a bit more volume. But again, bears will take it. They're not complaining. Gap fill down at 454.37 is the next one to be watching. We got gap fills in both directions now. But bears obviously have short-term momentum. I do have some hedges on, not as many as I'd like after a day like today. But that's the way it goes. So if I'm looking long into this weakness, I need a level nearby to be playing off of. And so that's going to keep me patient. If we gap down tomorrow, definitely going to be looking for some bounces, but again, not just scaling in. I need a level to play off of. Hope you're well, do good things. Here's some Colorado clips.